Joining us now is Wedbush Securities Senior Equity Analyst Dan Ives. Good to have you here on set.
Great to be here.
The fact that Google moved higher on this news, Alphabet moved higher on this news, I suspect you're not surprised since this is a top pick for you. But I guess break down what you thought was the most notable in terms of disclosures, because this wasn't the only one that we got in terms of AI today.
I think this is a flex the muscles. This is really them going on the offensive instead of the defensive. From an AI stack perspective, I think this could gain share in hyperscale. And when we look at what we've seen with Microsoft, and I think eventually we'll see with Amazon as well, we're talking about $1 trillion market opportunity over the next decade. So when you look at what Korean and Google are doing, this was exactly what they need to go after. But also it's developers. It's music to the ears of developers. Look, we believe some of the parts, $30 to $40 per share incremental for the AI opportunity.
In terms of the custom chip piece of news that we got today specifically, is Alphabet behind the ball, at least in terms of disclosing it, when you've seen similar disclosures from some of these other companies like Microsoft, like Meta, like others?
Yeah, clearly late to the game, but not too late. And I think this was something many were really yelling for them to do. They did it, and now it's really about can they gain more and more share within their install base? Because it was a missing piece in the puzzle. And I think if you look at everything they did in terms of from some of the disclosures, from the chip side, to I think some of the announcements that they're making, even on a customer perspective, it shows this is not a company with back against the wall. It's a company on the offensive. And I believe, and we believe at Wedbush, it's probably on large cap, continues to be extremely undervalued relative to the opportunity.
Okay, so how to think about that in terms of some of these mega cap names that I do know you cover, because you do also have Meta expected to unveil 2 small versions of its upcoming Llama 3 large language model capabilities this week as well. And then there's Apple. It's kind of like the dark horse out there. I think there's expectation that at its developers conference we could get some more detail on AI, but we haven't really gotten much from that company.
Look, right now, obviously, top of the mountain, godfather of AI, Jensen, NVIDIA. But then if you look from a software perspective, it's Nadella, what they're doing, Redmond. I think get out the popcorn type of earnings that we're going to see from them because of Copilot, because of what we're seeing from an AI perspective, monetization. We think $35 to $40 incremental monetization for every $100 spent on Azure. And then I think when you look across large cap, I mean, in our opinion, this is really going to be a very, very strong tech earnings season for the likes of Amazon, for what we're seeing with Google. When it comes to Apple, look, clearly iPhone, weak in terms of China, but that's not the story. The story here, $270 million is a pent-up upgrade opportunity over the next year into iPhone 16. And when Cupertino and Cook unveil at WWDC the AI strategy, I believe that's going to be a watershed moment, not just for App Store, but for iPhone 16.
Is that priced? So you don't think that's priced into the stock? I guess just looking at Apple, looking at the fact that top line has been so weak over the past year or so, do you buy it here ahead of earnings? And I ask that knowing you just came back from Asia.
Yeah, I mean, look, I view it that the bad news at this point is mostly baked in. Now, clearly, could we get more bad news in terms of weak June guidance like we talked about in our note? But I believe after come back from Asia, what we're seeing, we have not seen builds get cut. And I think the important thing here is clearly iPhone units are weak in China, but there is relative strength in U.S. as well as Europe. I think at this point, New York City cab drivers bearish on Apple as a stock. The risk reward going into WWDC with the golden install base of Cupertino, $2.2 billion. We'd be buyers here, and that's why we're bullish.
Okay.